Losing patience with your losing trades? Learn this simple 3-indicator scalping method that finds quality entries with low risk and big potential. We'll get started by examining each component so you can spot profitable signals and start scalping wins. Ready to turn things around? Let's dive in. I'm excited to show you an indicator that can really upgrade our trading. It's called the third wave, and you add it just like any other on TradingView. When used properly, I really think the third wave can make a big difference. Let me show you how I've customized it, then you do the same. When this indicator is analyzing the price chart, it's specifically looking for one particular pattern to form. That pattern is called ABCD. As soon as the indicator spots the formation of that ABCD pattern to identify, it will alert the trader with a signal suggesting whether to buy or sell at the same time. Sometimes these indicator signals can come at times that may not be the best for entering a trade. The market conditions may not be suitable, so it's a good idea to filter the signals. To help filter out some of the signals that may not be well timed, I suggest adding the volatility oscillator indicator. You can find it in the indicator section and add it to your trading strategy. But before using it, we need to adjust the settings to optimize how it works best. Specifically, apply these same configuration changes that I have used for it. With those changes in place, here's the lowdown. When we are looking to give a thumbs up for a buy signal, we want the histogram on the volatility oscillator to be riding above that zero line. And when it's time to think about sell signals, they're good to go if the histogram bar in the oscillator takes a dip into the negative zone. If not, we're talking about filtering out those signals. Consider this example. A buy signal was issued, but the volatility oscillator had a negative histogram. As a result, this signal lost its credibility and shouldn't be traded upon. Now, in the next example, we had a sell signal and the oscillator confirmed it with a histogram below the zero line. Therefore, you can use that signal to enter a trade. In the final step of optimizing the strategy, we need to incorporate the market bias cerebral indicator. Now that this indicator is part of the strategy, make the necessary changes as demonstrated in the video. Essentially, this indicator is one of the best methods for identifying trends. If the market moves above the market bias indicator and the indicator color turns green, you can feel confident in a strong upward trend. Similarly, if the market is below the indicator and the indicator color is red, you can trust in a downward market trend. Recognizing trends assists us in consistently trading in the direction of the trend, ultimately increasing the success rate of our trades. However, there's a crucial point to consider about this indicator. If the price is moving within the indicator's bands, it signifies an uncertain market trend. Therefore, I strongly advise against entering any trades in these conditions, whether short or long positions. By paying close attention to these examples, you will fully grasp the points I've mentioned. In this example, based on the indicator color and the price position, we are looking at an upward trend. Therefore, the sell signal gets filtered out, preventing potential losses. Moving on to the next example, even though the indicator color is green, we still have a sell signal, so this signal also gets filtered out. In the following case, during a downward trend, a buy signal is generated, but it's not valid and gets removed. The same conditions apply in the next example, and the signal gets filtered out again. So, if we combine all these conditions together, the entry rules for trading will be as follows. For entering a sell position, first we need a confirmation from the third wave indicator for a sell signal. After that, we should be confident in a downward trend. Next, the histogram of the volatility oscillator must be below the zero line. With these conditions met, the signal is validated and you can consider entering the trade. Immediately after, utilize swing highs as stop-loss points. In the next step, consider a risk-to-reward ratio of 1 to 1.5 for exiting the trade. Alright, now let's talk about jumping into a buy position. First off, check if the third wave indicator gives you the thumbs up for a buy signal. Once you've got that nod, be sure you're feeling good about the market moving up. Next, keep your eyes peeled for the histogram on the volatility oscillator. It should be hanging out above that zero line. When all these pieces fall into place, you've got the green light to think about entering the trade. Right after that, use those low points in the market as your safety net. And as you're planning your moves, think about a risk-to-reward ratio of 1 to 1.5 for when it's time to call the day on that trade. And at the end, if trading has been a bumpy road for you, check out this recommended video. It's packed with valuable insights to help turn losses into lessons and get you back on track towards successful trading.